So how to prepare for income taxes or taxes in general as an options trader or even as a stock trader? Well, depending on the type of account you have, the tax treatment will be different. First of all, if we're talking TFSA, tax-free savings account, you won't be getting any tax slips, so you don't have to do anything with your TFSA. You don't have to report anything. So here I am on the reports under Questrade for tax slips, and as you can see for my TFSA, I've got no tax slips. Now for your RSP, you have until March 1st, 2021 to actually contribute to your RSP so that it counts towards your 2020 tax return. Obviously, you know the contribution that you make to your RSP is tax deductible, so it's a deduction towards your income. It gives you a tax credit for that year. So here I am under Questrade reports tax slips, and as you can see for 2019, so for last year, I've got 3 slips and they're basically contribution slips. So if I contributed to my RSP separately, I'm going to have different slips, but these here represents the contributions that I made. So you basically send this to your accountant to prepare your tax return for you, and you just need to make sure that the contributions that you make to your RSP respect your deduction limit. And where can you find your deduction limit, your RSP deduction limit? You'll find it on your 2019 notice of assessment, which you can find if you're registered online with CRA. You can log into your CRA account and look at your RSP deduction limit. You have to respect that number. You can't over contribute. Now, if you withdrew from your RSP, you're going to get a different slip called T4 RSP. That's going to show or indicate the amount that you actually withdrew from your RSP. But if you didn't withdraw and you didn't contribute, then you're not going to get any slips for your RSP account. So if you withdrew from your RSP, it's going to count as income towards your income tax return. And if you contributed to your RSP, it's going to be a deduction towards your income for your tax return, which will result in a tax credit. Now, the margin account or the non-register account, this is where it becomes interesting. This is where any gains you make, whether you withdraw it from your margin account or not, becomes taxable. So as you can see for 2019, I've got 5 slips available to me. I've got several T5s, I've got a T5008, and I've got a trading summary. All I really need is the T5 and the T5008. So the T5 will show me all the dividends received, all the income received, and the T5008 will show all my capital gains, all my trades basically. So you just have to give this to your accountant. So do you wonder, do you have to track all your trades? You have to log all your trades, how much you paid, how much you sold, or vice versa, how much you sold, how much you paid? Well, it's supposed to be provided to you in these tax slips. But sadly, sometimes these tax slips are incorrect. I'll give you an example. So here's an example of a T5008. You see it shows you the book value, so your cost, and it shows you the proceeds of this position. So basically how much you sold a position. And as you can see, sometimes it just shows the same thing. It doesn't show the actual numbers. So just if you look at the first line, it shows a call here that was bought for $31 and sold for $31. So basically, if you give this to your accountant, it's going to show 0 capital gain to your accountant. But in reality, these are you probably made a capital gain or even made a capital loss. But sometimes these numbers aren't accurate. The broker doesn't provide the exact numbers. So in this case, it helps to log your trades for the year so that you can have the final amount provided to you, or you can reconcile it with the T5008 slip if you want. Or you could just give this to your accountant and he could just use these numbers instead, knowing that the T5008 isn't always accurate. Now, if you didn't log your trades throughout the year, it's not too late. What you could do is, with Questrade, you could run a report, account activity, and it allows you to download all your activity for the year in a spreadsheet. But of course, you're going to have to manipulate the spreadsheet. You're going to have to filter. You're going to have to sort some columns. You're going to have to group some symbols just to figure out which ones belong to each other, which ones you bought, which ones you sold. So it's going to be a little bit of work depending on how many trades you have, but the information is still available to you. Nothing is lost. So the margin account is really the only one that is taxable, or the non-registered account. Even if you don't withdraw the amount, even if you don't withdraw anything, even if you don't withdraw the gains, as soon as you closed a transaction, then it becomes taxable. And it will be recorded in your T5008. And any dividends you received in your non-registered account will appear in your T5, which you just have to provide to your accountant. Now, most of the time, it will be considered capital gains. The only time where really if it's considered business income is if it's something that you're doing full time, you're spending most of your week on it. It is your main source of income. So there are many factors that will determine whether it's a business income or a capital gains, but in most cases it's a capital gain. And if it is a capital gain, but you actually had a loss, that loss is a capital loss and it can only be used against capital gains, cannot be used towards your regular employment income. While if it were a business loss, a business income and a business loss, well, that business loss can be used towards your regular employment income. So if it's actually a losing year for you, it's probably to your advantage to claim it as a business loss, but of course you can't do that, because if you had, let's say, a $10,000 loss for 2020, well, it's going to reduce your employment income for that year by $10,000 and you'll get a tax credit. But then you might be stuck reporting it as business income all the time. And the year where you're profitable, then you're going to regret having reported as business income. Regardless, it's not a choice that you make. It depends on the nature of the transactions, the frequency of the transactions, how much time you spend, and some other factors. I'll link a video below which explains this more. But in terms of preparation for your tax return, all you really need to know is your contribution limit for your RSP and the deadline. If you haven't been recording your trades or logging your trades, it would be a good idea to start doing it. But if you haven't been doing it, it's not too late. You can download the account activity from your broker. Now, are commissions deductible? You don't have to worry about that because the numbers provided to you are already after commissions. So commissions have already been deducted. So if you use these numbers provided by the broker on the T5008, they're already after commissions. So yes, commissions are going to be deducted. And if you haven't been logging your trades and you notice that your T5008 isn't accurate, well, your broker also provides a slip called trading summary, which looks a little bit like this. And this one is more accurate, has more accurate numbers in terms of cost basis and proceeds of disposition, but it's just harder to navigate. Sometimes running the spreadsheet might be easier. Also, it'll show you all transactions for that year, even if it hasn't been closed for that year. So if it hasn't been closed, it should not be included. So if you just use the totals, it might not be accurate because it might not include the closing transaction of an opening trade, or vice versa. It could include the closing transaction of a trade, but the opening transaction was done the previous year. So really, you'll have to use a combination of the T5008, the trading summary, and running a spreadsheet, running an activity report from your broker to get your true numbers, and just send it to your accountant. That's if you haven't been logging your own trades in your non-registered account. And yes, you can deduct interest from a margin account. So on your tax return, there'll be a section carrying charges or interest expenses. All right, so I hope this video gives you an idea on how to prepare for your tax return. Usually the preparation should be done at the beginning of the year, but you still have some things to do for the end of the year, which is to contribute to your RSP by respecting your limit, of course, and the deadline. And of course, the slips should be available around mid-February. As you can see, these ones came out end of February. So don't panic if you don't see them in January or even beginning of February. All right, so if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.